I know you like the numbers and the raw pricing. So let's jump into Bloomberg and see how the Saudi bonds been performing. G-Space, hashtag BTV space 9542. In terms of the rally that we've seen and the rise the most since July, you can see that spike in the upside with the green bar. Talk to me a little bit more about your view on how this came out in terms of demand and supply and the pricing eventually.
So, Saudi issued 12.5 billion, but they had received 40 billion worth of orders. And this is pretty much in line with last year when they did $17.5 billion. They had received orders worth over 60 billion. So the market is really keen on Saudi exposure. It's a very, very rich country. Yes, in terms of the government budgets, right now there is pressure from low oil price revenues relative to previous times. But in terms of its balance sheet, its percentage of debt versus GDP is reasonably low. So it's a very strong balance sheet. And I guess that's what makes people keen to get that exposure. And that's what we have seen. It's multiple times oversubscribed. What that translates into is good pricing. So if you look at this current tenor, the 5.5-year tenor was originally guidance was 135 bips over treasuries. It actually priced at 110 over treasuries. So it's 50 bips tightening. It's again, illusion of demand is much higher than supply.
Obviously, the optimism is fueled as well by the possibility of selling off assets. Aramco is just, the tip of the iceberg here, along with stakes in the stock exchange, football clubs, and flour mills. But of course, the expediting the reforms there and selling off those assets, well, that's a different story there.
You're right. So the reforms are going on in line with the plan. So the National Transformation Plan 2030, I guess what they're doing right now seems to be tracking the plan, and that's reasonably comforting if the track record gets established. In terms of the sentiment, depending on the news headlines, if you don't hear anything from Saudi for 2 months, generally investors will start getting a bit edgy that the reforms are not going to plan. Then a news like the one allowing women to drive, that'll have positive impact on the labor market, tends to give a feel that reforms are going to plan.
So I mean, how much credence are you lending to that, to the latest reform efforts? Is that the story of faster reforms, or are you saying it's not having much of an impact? What's your take?
No, it's definitely having an impact, but has it reached its peak in terms of creating positive sentiment? I think there is still room for it to strengthen a little bit more. If you look at just the, let's say, credit default swaps of Saudi, which is an A+ rated country, versus other A+ or A-range rated countries like Korea or Malaysia or something, Saudi still has a little bit wider levels, right? It's in 80s, whereas Korea or Malaysia is more in 60s or 70s. So which means the investors are still a little bit skeptical. People still want to see continued progress. And any reform plan generally would also face some kind of opposition from people who may have a different opinion.
And that's going to be the key question going forward.